I go over my formula on what I use to actually make, when I do my options trading, what I use to make the gains. Yesterday, I made about just on my lunch from my job. I spent like 20 minutes, and in about like 20 minutes, I made $22 in a trade. I would have made more if I didn't have to go back, but I didn't want to hold my trade while I had to go back into work, so I had to cut it short. But yeah, yesterday I made about 22, and today I'll probably make some more. I use this strategy. I use the most effective strategy that I use for the stock market is the moving average, and I have 9 and 21 and the RSI. So this is the most effective strategy that I use to make my decisions. Whichever time frame you want to use, the longer time frame you use, the more you will make over time. So if you're using the 1 minute or the 5 minute, you won't make as much. But if you find the signals on the longer time frames, you'll make more money. So let me just look at today's stock market before it opens, and I'll give you my prediction. Okay, so before I begin, the first thing you want to do in this strategy, particularly, you want to have your moving averages, like I said, you want to have your moving averages be 9 and 21, make sure the colors are bright, and your RSI. That is all you need to be effective in options trading. Now, like I said, the longer you find the cross, you want to look for if it's crossing up or down. If you do it on the longer time frame, let's say, for example, SPY right here, if you came in right here where it crossed, if you're doing it on the day, I recommend doing your options contracts for about a month. Do it about a month, but any time during those 30 days, you could take your profit. Just saying, you have to buy, if you're doing it if it crosses on the month, I would do it on the month, because the potential of you making a lot of money is bigger, and you don't run the risk of losing your money when you do 30-day contracts. So if you want to do that, the first thing you want to do using this strategy, though, is you want to look at the daily, but the market's not open right now. But anyway, when the market opens, I wouldn't go get in right away. I'd wait it out 30 minutes to an hour just to see where the overall market is going, let the whales play it out. But the first thing you want to look for is anything crossing on any of the time frames, because that's what I look for. Whether it's crossing on I don't do 1 minute, I do the 5 minutes at least. If I do it on anything, on the least value time frame, I do it on the 5 minute. So if the 5 minutes crossing, let's see what we got here. If the 5 minutes crossing, the 15 minute, 30 minute, the hour, the 4 hour, or the day is crossing, that's when I would play my move. If it's crossing on the day, like right here, if it just crossed, I would come in with the 30-day contract. All the other ones, if it's crossing on the, let's look at the hour. Let's go down. Let's go to the 4 hour, see if it's crossing. Not crossing. Well, it did cross earlier, but not right now. No. So it's not crossing on the 4 hour. It's not crossing on the 3 hour. Not crossing on the 2 hour. It's not crossing on the 1 hour. Let's go down to the 30 minute. Okay, so the 30 minute, and to help you see it better, remove the candles. So it looks like on the 30 minute it might start crossing. So right when the market opens, it might cross. So let's just use the 30 minute for an example. So what we want to look for is the moments when they cross. So let's remove the lines real quick. The session line just kind of get in the way. Get the session lines. It's important to have the session lines on there. But when you're doing it on the 30 minute, I would make you got to find the cross first, and most likely you find the cross, it might go into the next day. So it's important to know when the days start and end, but those lines get a little distracting. So you want to find a moment when it crosses like that looks like market open to me. Yeah, that's market open, so I'm not going to count that. You want to look for moments when it's crossing or crossing up or down. So right here you see it crossing down, and we can confirm that when we turn the candles back on right here. So what I would do in this scenario is, whatever time frame you're on, like I said, the day I would do a 30-day contract. Anything else I would do like a week contract. But if you're doing like the 5 minutes or one of that, I do it the same day. But other than that, I extend out my contracts. So we see right here, the cross right here. So this is where I would come in. I would come in at a 411 put, around a 411 put on the money. And I would ride it out. And while you're riding it out, just look at your RSI on the bottom there. And you could get out. You see the purple line going above the yellow line. So you can get out here, or you can keep riding it out. But the RSI will tell you exactly when it's going to start correcting and go in the opposite direction. So I would get out here or down there, doesn't matter. But if you're following the RSI, you would be getting out here. That is a $7 difference in price on the 30 minute. $7 times 50, so that's $350 in a day. So that's the benefit of that's the benefit of doing it on the longer time frames. You'll run the risk of having your contract go out for another day or so, because you want to get the biggest gains as possible. But you won't find that if you're doing it on the 5 minutes and you're just trying to get those quick. You'll find those small moments or big moments, but the big gains will happen when you wait it out. So let's see if on the 30 minute it crosses again. It's better if I turn off the candles to see it better. So we see that it crossed right here. See that it crossed right here. So this would be another good point to get in. So cross right here. This is when I would enter. I would do a 408 call at this point. And when I have my entry point in there, I would look at the RSI. And I'd wait it out until I see the purple line going back into the yellow line. So this was this was 4 hours. So this was a 4 hours. So that's about $200 with in it 1 day there. So all you gotta really do is look for the moments when they cross, and then you get in, look at your RSI, and it will tell you when you should exit your trade. Now you can exit your trade 2 different ways using this method. And either way, it's a win-win. But if you go by the RSI, you'll probably make more money. But if you go by if you go, the moment it crosses first, when it crosses down, eventually it's going to do the opposite and cross back up. So that's where you would get exit. So you can either do it by cross, or you can go by the RSI. Either way, you'll be in profit here. So if we go by the first moment it crosses to the next moment it crosses, this is a 3.52 gain in almost 4 days. But if you judged it on the RSI here, so if you come here and you look at the RSI, you would get out when the purple line goes right back through it, so that'd be right about here. So you will make more money if you follow it. You'll make more money if you follow the RSI versus the next time it crosses, but most times you'll make money both ways, but you'll make more money if you follow the RSI and not the next moment it crosses, if that makes any sense. So let's look at a couple other chants here. Okay, let's see. Let's do this one right here. We see that it crossed right here, so at this moment here, I would do a 413 put, and then I would ride that out, look at the RSI. This one would this is 2 days. So that, like I said earlier, make sure you do a week's contract when you're doing these time frames. But this is a $3.6 difference in price. That's about 150 or maybe 150 to almost 200 bucks right there. So anyway, that's kind of the formula. What I like doing though is before the stock market opens is I always check the day, and you write it out on the day. You need to know what direction overall the stock market is going, so you have to wait it out for 30 minutes, maybe to an hour. And once you know the overall direction that the market is going, you're going to focus on that direction. You never want to go against the trend. So anyway, this is kind of what I do to make my returns with the options trading, and it works really well. It is my top strategy, and it works very well for me. It's not financial advice, so if you guys do want to apply the strategy, all you need is 3 indicators. You need your 9 moving average, your 21 moving average, and your RSI. If you want to do the 5-minute, I recommend doing that on a day trade, on a day. And then if you're doing anything after that, I'd recommend having your contracts out for a week. But if you're doing your signal on the day, I recommend having your contracts out for a month. Because if you see right here, you could have made a lot of profit when this crossed right here. You would come in right here, and it probably is still going to keep going down. So right about here, yeah, you would still be in profit. So on the day, if you were doing this on the day, you would still have your puts going in there, and it looks like it might rebound, but it probably will still go back down. So you want to follow, and this is the last thing I'm going to go by, and this is how to make a lot of money on the day. If you focus just on the day and focus on the moments that they cross to cross on the day, will probably result into a lot of some pretty good gains there. Because if you look at the last moment that they crossed, and you can go back and see it crossed right here, and this lasted. Let's do 30 days out if we can. Yeah, 30 days out was right here. So that was a $25 difference in price in 30 days. $25 difference in price during the last cross to cross. So that was $1,200 in 30 days. So I will just leave it at that. So if you guys want to do a strategy, I'm not responsible for any profit or loss. Anyway, if you liked the video, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.